The Moving Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours.
When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
At Big Iron Auctions, customer satisfaction is our #1 goal. As the 40-year leader in auctions for agriculture, real estate, livestock, construction, and transportation, we are here to serve you. Big Iron will handle everything from start to finish. From meeting with you, to prepping your equipment, writing the listings, and collecting buyer's payments, let us do the heavy lifting for you. We love our customers, and we treat them like family. There's a Big Iron sales rep in your area, so let's get together. To learn more, visit bigiron.com.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast Markets with Chip Nellinger. Chip Nellinger is with Blue Reef Agri Marketing out of Morton, Illinois, and he's nice enough to come on and talk about what's happening in the world of commodities. Chip, how you doing this morning?
Hey, doing well, Casey. I like your pullover there. We got similar taste.
We do. We like clothes that fit, so that's what we buy, right?
That's right. Good. Are you getting a check in the mail from Tommy Bahama or?
I wish that'd be great.
You should run this up the flagpole and send this to Tommy Bahama. Maybe we'll both get a little swag.
We might get a little something in the mail, a little kickback. One of those annoying Tommy Bahama shirts, those Hawaiian shirts they have. That'd be all right.
Yeah, let's do that next time. Because I've got one of those too.
Okay, I'll find mine. I'll dig mine out and put it on too. So
okay, sounds good.
All right, there we go. All right, man. How you been?
Hey, hanging in there. We've had a really nice fall. I mean, it's deep into November now, and we've dipped into the 30s a few times for lows at night. But man, it's been a really nice fall, up in the 50s, mid 50s, even up in the low 60s. So I've really enjoyed this extended run. And being in the Midwest, you're always wondering, like, all right, when's the other shoe going to drop? And it's going to be 32 below zero and
Any day.
a foot of snow.
Yep. Yeah, we've had the same thing out here. We've had really nice weather. This time of the year, I always tell my kids, whatever the low is, take it times 2, and that's what the high is going to be. So we've been in the high 20s, low 30s, pretty much, and we've been in that 55 to 60 degree weather range, and it's been nice. We got some rain the other day. We hadn't had any moisture for, I don't know, probably all summer, I guess, but it's been a while since we had some, so we got some needed rain there. But it feels like as you look across the country and you start looking at that drought map, there's not any real favors being done to anybody out there. That drought map just keeps getting worse and worse and worse. As you look at the wheat crop with planting conditions the way they were, Chip, what are you seeing right now in wheat? And the other side of it too is, while corn and soybeans, had a pretty good run, you didn't see wheat go anywhere. So what are your thoughts there?
Yeah, I think the wheat market has been really difficult to trade. It always is difficult. It's its own animal, its own kind of psychological impact of trading wheat. It's much different than corn and beans. I do think the wheat market, it has been looking at the rainfall. There have been pockets in through, parts of like the panhandle of Texas, parts of, the wheat belt in Kansas, in through Missouri, that have had some really good rain. And I think the wheat market has watched that forecast and those rains and responded a little bit negatively to that, as well it probably should, right? Any rain at this time of year, right after planting and before you go into dormancy, they were on the, really, really dry. So there have been pockets that have benefited from the rain. I think that's been a little bit of a headwind for the wheat market. You're also into harvest, deep into harvest in the Southern Hemisphere, Argentina and Australia, probably more importantly. And it doesn't look like there's any major problems there. Australia itself looks like they have a pretty decent crop. And so bubbling under the surface, I know we've talked about it for months, and I think the wheat market's maybe getting a little bit tired of it, is this Russian story, right? Are they going to ban their exports? A few weeks back here, they put, kind of a limit, a low limit on what they would allow to be exported, at what number, but yet the world market is trading below that level. And so I think that's an old story that nobody can kind of really wrap their head around what Russia's going to do. And they've kind of forgot about that. And so, with the Australian wheat harvest, a little bit of rain in, parts of the United States that have been beneficial, the wheat market really has kind of had a little bit of a rough go of it here the last couple of weeks. And that directly spills over and helps corn. I think if you just look at anything and rank it from most bullish to least bullish, corn is the most bullish, but it's not going to be able, to sustain a huge up move without wheat at least stabilizing. And wheat's had,
Right.
a little bit of a, what you would call a puke here. A lot of traders would call that a puke over the last 3 or 4 trading sessions. We lost 35, 40 cents real quickly in the wheat market, and that hasn't done the corn market any favors.
Yep. So let's talk about the corn market, soybean market here. Post-election, you saw all of the markets. Everything ran up except for wheat. Everything took off and ran. You saw some movement in even on the cattle side where things were kind of drooping for a little bit. You saw some move up there. A lot of that stuff has settled back down over the last, week and a half or so, 5 days, something like that. You've seen a lot of profit taking. You've seen a lot of just settling back into some normal ranges and those kind of things. Your thoughts on that run up and what was some of those triggers there? And then is this one of those, like we've seen this yo-yo effect probably the last 2.5 months where we see a big run up, then they kind of sell it off and they run it back up and they sell it back off and run it back up, run it back and forth, back and forth. As you look at that, Chip, do you feel like we're going to get back into one of those cycles, or do you feel like this run up was more just election related?
Well, I think it's a little of both. I think ahead of in the 2 or 3 weeks ahead of the election, right? Nobody after the fact, right? Everybody says, well, that poll was right, and we should have listened to this guy. But the reality of it is, in the heat of the moment, nobody knows. Nobody knew who was going to win. It was really up in the air, even though it looked like a landslide effectively for
Mhm.
Trump. So markets don't like uncertainty. Large trading funds don't like uncertainty. And so I think in the grain specifically, they had large short positions built up. They probably had some money, especially in some of their corn and bean positions on the short side. They said, why risk it? Let's take the money off the table, take our profits, head to the sidelines, and then we'll kind of make a determination after the election and going into the end of the year which way we want to play this thing. So I think you saw that, and that caused a little bit of a run up and gave us an opportunity, right? I think farmers took advantage of those rallies, up, I don't know, 1030, 1040 on the beans. And, you've got March corn back up, north of 440. And so I think that was part of it. And to your point, post-election, you had a lot of euphoria in the stock market, new all-time highs, huge move there. Now it's kind of settling back a little bit. Week 10 days after the election, you're like, okay, let's take a breather. We had these moves, but there's still lots of money on the sidelines that is kind of waiting to see, not just in the grain markets, but I think all our markets, interest rates, the dollar, the equities markets, and the commodity markets. What are we going to do here? And so, I think we're still, in the case of corn and beans anyway, we still are in that range. We've been in that sideways range for, probably working on 4 months now. And I think you're maybe towards the low end of it. And given where we're at in, mid to late November here, there's probably still time to expect that we would have at least one more push up towards the upper end of the range. I mentioned earlier, this demand has been really good too. So on top of the funds coming out of some shorts ahead of the election, you've had massive buying in corn and beans from China in the beans, from everywhere, especially Mexico in the corn. And some of that you could probably say maybe that's front running, trying to get secured a bunch of corn and beans and shipped out before potential tariffs come in with the Trump administration. It looks like that's likely going to happen. It happened last time he was in office. And so you've got this big demand underneath of us too that's kind of, there to buy the breaks. What you lack right now is any type of a weather or southern hemisphere weather story, because they started out a little on the dry side and kind of delayed their bean planting a little bit in Brazil, but they got some rain. They got caught up. They for the most part got planted. They're getting rain. There's nothing threatening in that forecast as it looks today. Now it's very early, and they've got the entire season ahead because they're just kind of finishing up planting, getting the beans emerged and out of the ground. And so they got a lot of growing season ahead of them. But right now, you lack that bullish story to really push us through the top side of the range here. And the demand is good enough to keep us from falling out of the bottom side of the range. So I think we're just left here for a few more weeks anyway, maybe into the end of the year, or just shortly after the new year, of slopping around in this range, that we're probably on the low side. And the expectation is that we probably drift back up towards the top side, sometime going into the end of the year here.
Right. Okay. All right. So let's talk about what you see happening on the cattle side right now. Looks like mostly cattle's been around that 185 range, sold back in about $1.50 lower than what we saw last week on average. Still, it kind of seems like that 182 to 187 range is kind of where you see things falling in at. Chip, as you look at what's going on with the cattle market, it feels like, okay, we're going to start seeing a downward trend now, and then about the time that happens, you start seeing it move back up. So I guess your thoughts there.
Yeah, that is the one market we really didn't see the funds do much with as far as getting out ahead of the election. And so, I think you're still under the 2+ year influence of, major drought in the plains and that far, northwest corner of the plains, right? And I don't think we've healed the pasture situation. We certainly haven't built the cattle herd yet. The funds had a big long position. They shot cattle up, $10, $12 at least in a short period of time, coming in with a big, large, long position. And in the same breath, though, it almost felt like, okay, the funds have the position they want on. Anybody that wanted to buy it and get long is long. And now what? Now we need the cash market to continue to go. Well, we've seen the box beef slip a little bit. We've seen cash kind of come back just a little bit. And so the risk now is, without the cash market screaming higher and, pushing north of 190 into the end of the year, or the first part of the new year, you're left with, okay, what's going to be bullish, right? Yeah, longer term, we still haven't built the herd, but in the same breath, everybody's kind of long in here. So we've had a nice correction off the highs, and we're starting to slop in here. I think you've seen some signs of some cracks. Just looking at the chart, technically, looks like maybe we've topped this thing. Certainly, if we would push lower into new lows for this move, multi-week lows going into the close today or Monday, Tuesday next week, you could add to the selling pressure. But to me, it's like a little bit nerve-wracking that, okay, we've traded a lot of bullishness. We're 2+ years into this tight cattle herd, not building supplies, drought, issues. We haven't fixed that yet, but I'm wondering, who's going to buy it? If the funds don't keep buying it, they're not in it for a 3-year trade. They're in it to make money. You're also coming into the end of the year here in 6 weeks. So that could create some additional volatility, not only in our livestock markets, but also our grain markets. They have a big long position in hogs too. I mean, talk about a bull market. We're talking about the fundamental reasons in cattle, but hogs are sitting there saying, hey, what's Coach Corso say? Not so fast, cattle. We're going to catch up and have our own bull market in the hog market.
Yeah, you got to get your cattle head on so you can be a part of that team there.
Yeah, you got the big bull cattle mascot head over here and a big hog over here. So I don't know which one to pick right now.
Yep, that's for sure. All right, let's jump over and talk a little bit about. This is kind of a forward-thinking question for you, Chip. Here, so get your crystal ball out. With Trump coming back in, drill baby drill. That's been he ran on that, and that's what he did last time. No doubt he's going to do it again. As you take a look at the current situation in oil, it feels like the oil market wants to stay between $70 and $75 a barrel. When it gets one way or the other, it kind of settles back into that mid to low 70 range. As you look at that and you start thinking about, going back to being more of an energy independence, being a net exporter, natural gas production, all those kind of things you see happening, even though Biden did loosen up some of those restrictions late late last year, and kind of what they look like now, and they're kind of easing back into some of that stuff. As you look at oil moving forward, Saudi Arabia, OPEC nations, stuff like that are going to say, well, America's going to come back online and stronger than they were in the past. There's going to be more oil out there. Would you expect to see the OPEC nations cut production to keep the price up, or as you look at this, Chip, what are you banking on here a little bit?
Yeah, there'll be a lot of moving parts there, and you hit on a lot of them, and so it's going to be really interesting to see what happens. The good thing is that we know the playbook, right? Like, right. We had 4 years of Trump before. Yep. The best part of him is he's got a plan. He's not going to deviate from his plan. If he says X, he's going to do X. He's not going to do X plus or minus something. And so one of his biggest things, as you mentioned, we had it last time during his administration, we're going to become self-sufficient on energy. We're going to drill. That it doesn't just happen overnight, right? Because some of the disinvestment because of the previous administration and their outright hostility towards fossil fuels, there's been a lot of money pulled out, right? I mean, what energy company is going to put a bunch of new investment into drilling for oil or natural gas when the rug is just regulations and penalties, right. And it's just been an environment. So you don't just turn that on overnight and all of a sudden on January 20th, we're just pumping oil and energy sufficient again, energy independent. But I can guarantee you behind the scenes, all those companies are making plans, right? We got to get the people back. We got to get labor back. We got to get equipment back. So that's going to be a slower process. I do think to counter that, obviously OPEC is not dumb. They have the tools and the means to kind of turn the key a little bit to slow production down there in those OPEC states to maybe counter some of our production increasing. So there is a little bit of a push and pull there. But I think the other thing maybe that is an unknown right now that could greatly affect things. Well, there's two things. China, right? They've had their own problems. They've been pretty sluggish on their growth and their economy, and they're doing everything they can. You got to believe to kind of re-stimulate their economy. But if they keep sputtering, that's a big part of the equation of what world oil demand is. So China is part of this, and that's a little bit of an unknown. The other part is, what is Trump going to be able to do in regards to Israel, Iran, and Russia, Ukraine, right? There's a lot of people think he's the great deal maker, that he will get something fixed pretty quickly. So if you get some ceasefire in Russia, Ukraine, if you get something calming, maybe, I don't know if there's ever been peace in the Middle East, but something calmer than certainly the aggressive environment we're in right now, that could go a long ways towards taking some risk premium out of the oil market. So I guess in my mind, you're never going to do away with the risk that you wake up some morning and Iran or Israel, something has created a flashpoint in the Middle East, and you could tack $20 on crude oil overnight, literally. But barring that, I would think that the oil market is probably on a very choppy grind lower that maybe sifts out between 55 and low 60, 62, $63 crude oil eventually. But you're always going to have that possibility, and always have in the oil markets, that something flares up somewhere, some conflict, particularly if it's in the Middle East, and you just tack $20, $30 on crude oil if that happens. But I think the world's starting to get around the fact that last time Trump was in there, things went pretty smoothly in the world. Things calmed way down. Right. The ocean turmoil, calmed way down. There's still some waves, but it wasn't 50-foot, tidal waves. And so I think the assumption is that's going to happen slowly but surely once he gets back in office. That probably takes some premium out. And the faster we can get that oil production ramped up here, probably the faster, we get into the 60s or even the 50s on crude oil. That has implications on the grain markets, especially. So that's something we're going to have to watch, right? There's going to be give and take because as crude oil goes lower, obviously that pressures margins on ethanol, biodiesel, that stuff. That's a whole nother can of worms. I can't even pretend to understand all the intricacies of this whole biodiesel and the credits and the used Chinese cooking oil. And that's a mind-boggling quagmire of confusion there. So hopefully we get a little better clarity on some of those renewable fuel laws and issues once Trump takes office.
Right. Nothing's been announced yet. Can't really point to anything, but you talk about, we know the playbook. So I guess looking at the tariff situation, as you look at this compared to what we saw happen last time, I kind of feel like there's going to be a different approach to what we saw last time. I really think that's going to be the case. But as you look at possible tariff situations, your thoughts there and how that could affect things.
Yeah, I did a little presentation at your summit, right, a couple weeks back, and I talked about that. The title was the tightrope walking elephant in the room, and it's the bean market. So not only do you have these potential tariffs on China, and they're going to, last time, just going off of the replay of last time, they cut their bean purchases to a minimum. Now, at that point in time, they still needed our beans a little bit because South America had some below par production. And so the problem this time is there's no other problems that have developed yet in South America. We just had CONAB, which is kind of the equivalent of the USDA in Brazil. They came out with some numbers yesterday, 166 million metric tons and change. The USDA is at 169. I did a little work and converted that at my presentation at Moving Iron Summit, and that's over 6 billion bushels of beans that Brazil is about to produce. If they produce 6 billion bushels of beans and we put tariffs, effectively China needs zero. They can get by for a long time without taking 1 bushel of U.S. beans, and so that is a big issue. To your point, though, will it go a little bit differently? It might rhyme, but it's probably not going to be exact. And maybe Trump's got some things up his sleeve that he thought about differently. He's had a long time to think about it, and a lot of good advisors advising him. So that is the big issue, and so I don't know how that will pan out. I don't know how the rest of the growing season will pan out in Brazil, but as far as grain specific goes, that bean thing is a real big issue. That has implications on obviously our demand, but what acreage will be next year. If you see beans, in the low 9s or with an 8 in front of it, certainly corn doesn't have to, be challenging $5 in that environment. So unfortunately, the bean market, it's going to be I think a fight between the strong demand and the bullishness of corn and the weak demand and the bearishness of beans. What's going to win in that equation? And it's going to keep things volatile, but that certainly has bearish implications as it looks to be on paper right now.
Right. And I saw something come through the other day, and they were talking about potential Secretary of Ag nominees for Trump, and he had a long distinguished list there. But one of the guys that was on there was Greg Dodd. Greg Dodd was the guy that was he works at Aimpoint Research right now, but he was part of the team that went and negotiated that first tariff trade negotiation thing with China back when Trump was there. So having somebody like that come in that understands what that situation looked like, it'll be interesting to see what happens, right? And it kind of feels like Trump is going down the tariff path that is going to be like, no tariffs as long as we are treated equally with you. You treat us equal, we'll treat you equal, and with no tariffs. And if you want to build something and sell it in the United States, you got to build it here. And that's kind of his approach to things. And it feels like he can convince China to waive the tariffs they have on our stuff coming in, and the tariff thing won't be there. But as well as I do, that's going to be easier said than done. So it's going to be interesting to watch how that plays out.
The one thing that is, and this is way beyond my pay grade, is this, I believe it's the 45Z. I believe it is part of a law, but it has allowed as we build up this massive, domestic renewable diesel industry, the unintended consequence is we've also allowed in all this used Chinese cooking oil, right? So they import beans from us. They use it once or twice, frying up some wontons, send it back to us, and we're competing against ourselves. And so that is silly. I'm not an expert on policy or lawmaking like that, and I don't know if an executive order could fix that. But that is one glaring problem we have right now. Is this used cooking oil that's coming back? We ought to be feeding that. Renewable diesel stock with our own soy oil, not Chinese cooking oil. So hopefully on day one, he could sign some sort of executive order that stops that dead in its tracks. And that could be that would be huge, huge for soy oil. And so there could be some friendly things that come out of this. My brain and everyone else's brain is like, oh, it's going to be bearish tariffs, no demand from China. Well, there could be some things that are positive out of that, or maybe it's a different type of an agreement, to your point, that causes a big shock to the market, because everybody's leaning, myself included, that it's going to be bearish for beans. But if it's not, and that surprise comes out of the blue, you've got some upside potential because everybody's short and expecting prices to go lower because of these tariffs that are coming.
Yeah, that bean oil thing, or the used cooking oil thing, just by itself, I had no idea that was going on until about 4 months ago, something like that. And I didn't either. It's like it was over half of the bean oil that we would produce in the United States was coming from used cooking oil from around the world, not just China, but everywhere. Palm oil and all this different stuff coming in that we were importing into the United States to make biodiesel with. And I'm like, why are we not just using
Yeah, think about that. I mean, it's wildly profitable to them too.
Yeah.
Think about the distance from whatever that ports up in the Puget Sound or Long Beach, LA area, to send a container ship full of used cooking oil from China to the United States to feed our brand new. Just turn the key on and turn the lights on at this beautiful renewable diesel facility in the Midwest, and we're feeding it with Chinese cooking oil instead of our own soy oil that's grown in the fields that surround the plant. It's mind-boggling.
Yeah, it's it was almost one of the things where I had to like, this can't be true. This is one of those things like it does make zero sense.
I know.
So yeah, that's crazy.
And again, it gets to I hope part of Trump's plan is to get rid of some of these stupid regulations and like. Every time you increase some rule or regulation, you run the risk of something like this rather than just let the market decide. Let the free market decide. It always wins. It's sometimes painful, oftentimes painful. But the more you mess with the free market, the more bad consequences you have. And this used cooking oil thing is a perfect example of that.
Yep, for sure. All right, man. Good stuff as usual. Chip, folks want to reach out to you, get more information about what you're doing at Billy Reef. What's the best way to do that?
Yeah, just call our office, 309-550-7213. Harvest's getting wrapped up for a lot of people. A lot of field work been done, and now it's time to focus on the markets and get a plan because if you look out at prices, it'll make you look twice, and we got to do some planning and know what we're going to do whenever the market does what it's going to do for the new crop because it's going to be hard to get to profitable levels, but not impossible.
Right on. Chip, appreciate you being on the podcast. We'll catch you next time.
All right. Thanks for having me on, Casey.
Right on. I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC, LinkedIn at Moving Iron Podcast. Check out the video version on the YouTube channel, which is the Moving Iron Podcast YouTube channel. Go to movingironllc.com for everything Moving Iron related. And I guess we still can go to TikTok. You can find me there at podcast, so at Moving Iron Podcast. So with that, I'm Casey Seymour with Chip Nellinger. Let's move some iron, folks. Out. Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately? Target the right buyers and close more deals? Reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is proudly provided by Axon, helping dealers move more iron for the past 100 years. Find out more at axontire.com. Move more iron with Axon.
Moving iron in the 21st century.